So let's start a conversation with N Jayakumar of Prime Securities. Jake, welcome back. Thank you for joining us. Jake, do you think the India 2 market adjustment is behind us now?
I think, first of all, thank you very much for having me over. I think now we're back to, looking at a few near-term events like the ministerial births, for instance, and more importantly, what happens in the rest of the world. I think the one positive stimulus could well be the RBI policy, and we can discuss, in terms of what each of these could mean for us. But I think we are really back to the basics in every sense of the word now.
Yeah, absolutely. Jake, in our conversations with most market participants, we've heard the word privatization, that it's the need of the hour, it's high time that some of those PSU jewels better be privatized, and that's the only way that you will chug along the economy, you will get rid of, all the dead wood, if I can call it that. And more importantly, that's also going to lead to other ancillaries like job creation, etc., etc. as well. Do you really think that this time around that would be a government focus too?
I suspect they may have no choice. I think, let's be very clear. What has brought them here is the clear, brutal focus on the broad, base of the economy. I think it's not, we in Bombay and in, South Delhi would like to believe that, we are where it matters. But I don't think that the focus is completely somewhere else. And I think we are important but ancillary to the process. So the important thing is to focus on what's going to give a larger uplift to the economy as a whole, and if that means greater thrust on infrastructure in the rural space, agricultural stress, etc., these will really be the focal points they need to look at. In order to arrive at that, you probably need to spend a lot of money, which is where things like
the point what we are discussing is that when India 1 came to power, we saw similar kind of a market action, starting from PSU banks to PSU mining companies to construction company. People were blown away with the India 1 mandate. The promise and the appeal was so extraordinary that it led to a complete magical re-rating of Indian markets. I mean, suddenly stock market participants thought that India is the country of Alice in the Wonderland. Right? But 5 years of the India regime, if I look at what Nifty has done, we simply have mapped global markets.
Absolutely.
So if one looks at history, and like you always say that history may not repeat itself, it rhymes. This is history rhyming again. Initial euphoria, and then it could be back to global cues, earnings and other factors.
So I think there is a small subtle difference I want to make out. Markets tell a story, we may not always hear it, which is that ultimately PSUs, it's not the PSU as a basket that moves, but where the risk of dilution doesn't exist. Because that's what moves, why do multinational pharmas continue to rule at high multiples?
They don't raise capital.
Because they don't raise capital. Now that's where I think you are at that inflection as far as PSU banks are concerned, because most of them are down to the 50-55% range. It is the 2-3 big boys which matter.
NTPC, SBI, which are the other ones which matter?
The PSU banks, I'm saying.
Yeah, SBI is the big one which is down.
Or Bank of Baroda, for instance. So some of these names, I'm saying they may be in the middling 50s in terms of government ownership, may not be, at the 75-80 where there is scope for capital raising through the market. So if that is kind of limited and the government broadly believes that 51% is a Lakshman Rekha and no further, then for the first time that growth will come through internal efficiency improvements, not dollops of equity that come from outside. So the first fundamental reason why, for instance, I would be very bullish on PSU banks, names apart, and top 2-3 everybody knows, so I may or may not name them, but it doesn't really matter. If those are going to be growing essentially through organic expansion, efficiency, better NPA recognition, etc., etc., and most of the problems are kind of behind them, then I think that could be a secular bull market in PSU banks. Is that the case with oil marketing companies, etc.? No, because you never know if there's large profits coming, and the government could well step in and say, we want to prune profits, we want to cap marketing margins, blah blah blah. So those kind of things still exist. Why? Because at the end of the day, the surpluses the government is generating from any of these, and the PSU banks now I think stop giving out surpluses. It's in fact an area which needs capital, and the government is happy that they access the capital markets rather than come to the government for money. So from that perspective, I think the is different from the PSU space as a whole. But if you ask me what happens to sale, what happens to etc., those are completely different issues. I mean, they may still need capital, they may still need...
You're not willing to look at them just yet.
I don't think so. I think we need to... This is a market you need to be brutally focused on stocks, because the same sector you could have stocks that go bust and stocks that hit new 52-week highs. And that's going to happen. You see the aviation space, for instance, every space, I think it's going to be a brutal discrimination between one stock and the other. So in every industry, you'll find this. But there may be some stocks that have the tailwinds of growth. So I think, for instance, the road sector could be huge orders, because one of the manifesto mentions, if you will, is that there is connectivity both digitally and physically, which means that you're going to have right down to the smallest talukas, etc. You're going to have connectivity digitally, and you're going to have roads, bridges, highways, etc. built. And it's been seen that that ministry has actually performed exceptionally well in the first NDA regime as well. So given that kind of thing, and then there could be the other mention, which is pipe water to people down the to the length and breadth of India. Now you could look at companies that are in this space and draw your own conclusion. 3 or 4 companies will be huge beneficiaries of orders. At the end of the day, whether these orders are profitable, etc., etc., a different question. But at least in terms of a space, I think the infrastructure and the pipe space could be interesting days that we could see. The other, and I mentioned PSU banks. So these are, I would say, 3, and of course the infrastructure of the transport infrastructure, which means aviation could be one, roads could be the other, railways could be the other, and they could be beneficiaries of these, because all of these represent benefits to the mass as a whole, uplifting what I call the base of the pyramid sort of moves up. And if you look at that as a thing, the first 2 years money is going to be spent on these two. Where will money come from? It has to be privatization. I don't see any other way. Or you have serious FDI flow in, and the FDI opening up dramatically. I think that those are the areas. I mean, a bullet train from Ahmedabad to Bombay is not relevant. I mean, it's not relevant in the context of what we are saying. But deep down connectivity, I think, is big. I think it could generate employment. It could generate some kind of capital formation in the private space, which otherwise today is lacking. So the government needs to be on the front foot spending money. Who else is going to spend?
Yeah, absolutely. You fleetingly mentioned aviation, and since the last time that we talked, we are down to 2 listed players now.
Well, yeah.
And within one as well.
Well, not listed players. We still have 3 listed players.
Yeah, that's what I said, right?
You said 2 listed players, so.
Yeah, well, one is shut shop operation, so that doesn't really count. But anyway.
Since you mentioned listing, I'm sort of quibbling. So.
In operation listed players. So what happens now? I mean, do the worrying promoters actually worry you, or you're fine with the growth and the kind of guidance and capacity addition, etc. that's happening?
So so first of all, I think the space itself is evolving. There have been people in the past, there have been deaths in the space, and new players have come up, etc. That's part and parcel of any kind of industry. I think there will be a lot more action than, and I don't think, to quote a Hindi movie sort of phrase, picture abhi baki hai mere dost. I mean, there's lots that's still waiting to happen. I think it's unfortunate what's happened to Jet, for instance, and I think, but I still don't believe it's not. I mean, there could be people coming in. Of course, the routes have kind of gone. The slots have been reallocated temporarily.
Just yet,
But in this kind of a transaction, Jakes, historically, do you think minority shareholders will get their pound of flesh, or will there be anything left on the table? Because I'm putting examples here, Bhushan and Tata. For the minority, so the Tatas may have got a good deal, the banks may have got a good deal, but frankly, for minority shareholder, the CDR and all, and what happened to...
So, if you take finance 1.0 or now 2.0 or 3.0, it says basically that in a liquidation scenario, going concern is different. These are not going concern situations. What happened? The debt guys had to be paid off first. So the debt guys start taking haircuts. Where's the question of equity guys getting anything? And they are below the pecking order very clearly.
So don't buy Jet.
Well, I'm not. I mean, you can infer that, but the issue is not about one specific thing or the other. And I'm not even remotely alluding to stocks, because I could be conflicted. In fact, I will be conflicted, but I think the important thing is where shareholders have to wait for debt holders to get paid off, and the restructuring is through courts, etc. Very often, if not in all cases, the equity holders will just get finished. Okay. So that's very clear.
Okay. What about the market leader? Any worry with regards to what's going on with the promoters?
No. So. I think commerce and economics are big levelers. So these things will get sorted out, and I don't think
in their better interest.
Absolutely, no question.
So I noticed, you talked about public sector banks, infrastructure, key drivers, post the solid election verdict. Consumption didn't figure on that list. Does it figure at all, or you're...
Not really. I'll tell you why. There's a very good reason, and there's also shades of consumption across durables and so on and so forth. But I think the real issue is, the availability of debt and NBFCs. So what's been now seen is that in the first sort of flush of panic, people said this will happen. The NBFCs by definition were well capitalized, most of them. But at the root of an NBFC business plan is a simple thing, which is that there is equity. Equity will keep coming in, but there's leverage, whether 4 times, 5 times, 6 times, depends on the euphoria and the exuberance of promoters. That leverage needs to keep getting paid down to banks, because these are regular payments, and to bondholders, etc., and keep getting supplemented back. The moment you tell an NBFC that you start paying down your debts, but we're not going to give you fresh money, it's actually an executive summary of please close down shop. Because as they say, agar dhanda band hai, so even people who owe you money will turn around and say, inka to, dukaan band hai, what's the point? So which means that people who borrowed, let's say for progress payment of their house, progress payment of their buildings, builders who have been given, let's say 150 crores in 5 stages, if they get the first 2 stages and say, we're not getting the balance, they'll turn around and say, let it be an NPA, repossess kar lo, kya farak padta,
So we are yet to see the worst of the NBFC crisis?
So the way I see this is 35% virtually of credit in the market. So you'll say the solvent guys, they cannot, now suddenly people say, go from 9:1 or 6:1 to 2:1. First of all, you can't do that overnight. You can't crunch debt like this. Number 2, the RBI still seems to be in denial that there's a problem in the space. Yesterday, where there's been a clarion call for liquidity, they come in and start talking about norms for fresh lendings being even more restrictive. Which we say, which essentially means that somewhere along the line we're walking on completely 2 different alleys, as it were. Somebody is calling for liquidity. Now, you could turn around and say that this leverage was never okay, but the reality is, and you need to understand this, when a bank lends 100 rupees to an NBFC, they put 10 rupees, let's say, as capital. The NBFC lends to you and me as MSME or small finance, and they put aside 10 to 15 rupees further of capital. So the money that goes to the banking system to you and me has 20 to 25 rupees of capital, because it's a capital allocation, because the capital adequacy, which is based on 2 layers of lending. The moment it goes from bank to you and me, the bank does not have the mechanism, it's only a one-time capital that is there, and the recovery is far better in the hands of NBFCs than in banks, which is the reason why para-banking came in, will remain, and is there in every part of the world. You can be restrictive, etc., but these have to be phased out. The moment you say liquidity comes down, and they are financing all your durables, so the consumption that you talk about, long answer to a short question, is going to be affected until the liquidity in this sector continues. One Bajaj Finance or a set of HDFCs cannot address all needs of affordable housing, all needs of durables, all needs for white goods, etc. That's a reality. So you need the length and breadth of the institutions prevalent in the industry to actually be
to fund that.
But Jakes, that's typical. I mean, the purist would say, look, NBFCs forgot risk management. They completely forgot what ALM is.
I don't think that's true. I think what they forget was they assumed that credit would continue coming to them subject to a
source of capital would be
But what triggered this off was this ILFS, which is not an NBFC. ILFS is a core investment company under which there is an NBFC which lends, and there were all kinds of violations that are coming out in ILNFS, which has nothing to do with the way 95% of the NBFCs in the market run, which is reality. NBFCs report into RBI. There are I think a greater oversight is called for.
That's what RBI issued last week, I think. That's what they've issued last Friday. Right?
But those are more restrictive. Right now, in the short run, it's like saying, the patient is in ICU, he needs A, B, C, D. No, but in general, he shouldn't be walking 20 kilometers a day. Let's make sure he only walks 10. That's great if he survives. I think the reality is, again, as I said, my heightened anxiety on this, or the heightened anxiety of players in the market, is not resonating with the regulators, who tend to believe that 1 or 2 players may have an issue, but they may die, they may get consolidated. Maybe they will. But I think there's an opportunity here for a lot of foreign capital to walk in, as we are seeing in some of the
we've seen perhaps pyramids are talking to
different people in different forms, different buckets of the NBFC space are bringing in capital, and hopefully we'll get in foreign debt as well to supplement the unwillingness, if not the inability, of the Indian banks to lend.
So but my only point is, these prices will not come back. All this consumption slowdown.
Yep.
I mean, if you can see it, so can the market. The market has already perhaps digested all of that. Is that not in the price, and are these not levels where you should be maybe start nibbling into at least the market leaders?
That presupposes a return of consumption and return of normalcy of some of this. We've not seen any steps taken. So to me, consumption is not a slam dunk buy. It may have been for a long time. And as they say, you know, new regimes, new markets bring new leaders. So maybe it's time that we start focusing on a lot more of the beaten down and a lot more selectively. So it may not be an across the board. So I think the index is very misleading in this. 80% of the market, as we've, if not 90% of the market is at 25% below, may have moved up a little bit. I think we need to look at some of that. I don't think it's going to be very easy hiding in the same pockets and expecting returns.
In the next 5 years, will leadership remain with HDFC Bank and Bajaj Finance, or will there be new leaders who will displace them?
Very tough call to make. I mean, I think they're doing, you know, perfectly well. Whether they get displaced, I don't know. But the question is, where will you get better returns from other stocks? The answer may be yes.
So within the Nifty?
Whether within the Nifty or outside. So you may look at stocks
outside, that... I'm sure you would in the next 5 years.
Yeah, but you know, it's not easy for me to make that kind of a call because there's so many moving parts. And I don't want to hazard a guess because that may, you know...
So they could be outside financials too?
I personally think PSU banks could be a very big place for returns. You know, for all the reasons that we talked about.
So the kind of return expectation one should have going forward. You've been very focused today on saying that it's going to be stock specific.
Yeah.
I guess taking from what Aisha was also just saying, so do we then, you know, differentiate between returns we may see on the index versus what we may see on select names?
I think the index returns may well be muted because I think the index at the end of the day attracts ETF money.
Sure.
ETF money is a function of what happens internationally. And as we know, we're in the throes of, you know, slowdown in various parts of the world where, you know, interest rates are coming off, reflecting that oil hasn't cooled off. So the cocktail isn't particularly exciting. And then there's this overhang of the US-China trade war, which could be beneficial. You know, textiles could benefit, value-added textiles could move from China here. There could be some chemical exports from here, maybe pharma benefits. But so I'm saying it's become very much more. So I think the overhang of a US-China imbroglio could be huge. The fact that you know, the world has been hiding in you know, the big tech names, that could change. There's a lot of things that that could change, especially the fact that ETF money coming in is entirely a function of what happens to flows in emerging market allocation, and we've already been outperforming. Of course, there's been some catching up to do, which we have done. So I'm not sure the index is necessarily the place to hide, only because the allocation of money gets there. And as definitely as, you know, somebody as a stock picker in the market, I wouldn't just put my money on the index. And I think while people may allocate and they still may come out ahead, but for true stock pickers, I think the answer lies elsewhere, for sure.
Well, appreciate your time. So glad you could join us, and we really covered a range of topics with Jakes.